It's time for Credit Puppet!
Thank you. Welcome to episode 7 of Credit Puppet. 7.
My lucky number.
Woohoo! I had a lucky number too. I was looking through the Fingerhut catalog and I got a big screen TV and I only have to pay $7 a month. Isn't that great? I told you I'm a great shopper.
You are a crazy puppet, CP.
Crazy for bargains.
That's right. Well, you think it's a bargain, but it's really not, and I'm going to tell you why.
Why?
Today we're going to wrap up our series on credit scoring. The last factor in credit scoring, CP, is called types of credit in use, and it is up to 10% of your credit score. Sometimes it's referred to as credit mix, the mix of credit you have on your credit report.
I like the credit mix.
And basically refers to what type of credit counts are being used and how many of each type you may have on your credit report. Okay. We do want to see on a credit report a variety of different types of credit on there, and we certainly want to see more than one account, because the more credit and different type that you're handling, well, the better risk you're going to be to handle other types of credit, so therefore they raise your credit score up. Does that make sense, CP?
Yeah.
Okay. Let me tell you why your Fingerhut shopping is not such a good idea. We did a little tease in our last episode, and we talked about using the big boys for your credit. And what we want to avoid, one of the things we want to avoid in the credit mix is all those department store credit cards, finance companies, and that's really what Fingerhut is. They use finance companies to do their credit.
Okay.
And what a lot of people don't understand is that finance companies, it's easier to get credit from. They have lower standards. So if you don't have good credit, you may have to go to a company like that to get your first credit. But as you move along, you want to get away from those companies because they have lower standards, the credit scoring model sees that. So if all your loans are from finance companies, Fingerhut, department store credit cards, your score is going to be lower because they see you're not going after the better types of credit, getting your loans from banks and credit unions and having the major credit cards. Visa, MasterCard, Discover, and American Express. There are a few others, but those are the main names that most people know. So that's what you should be shooting for. Once you get good credit score, CP, get you and I think we got you an American Express card now.
Yeah.
So you want to use that for your purchases, and that'll keep your credit score high as you use it, as long as you keep your balance below 30%, as we talked in one of our other episodes.
I have a question.
Shoot.
Since I have this Fingerhut thing, should I pay more on it to get out of it quicker?
Try to pay it off as soon as you can.
Okay.
That would be a great thing to do. And then when it's time to get your next credit, right, move up to the big boys. Remember, bank, credit union, and then the major credit cards. That's where we want to go from now on.
I just love the name. Fingerhut. I'm a puppet.
You puppets are crazy. What can I say?
Okay.
Now, when we talk about credit mix, when we're looking at a real good credit report, we want to have different segments represented on that credit report. A mortgage is a great thing to have on a credit report. But you don't want to have too many mortgages. 1 or 2 mortgages is going to be probably pretty good. An installment loan is good to have on there. A good example of an installment loan, CP, is a car loan.
Ooh.
But you don't want to have too many car loans on there or you're going to become risky. Revolving accounts, which would be a credit card. Having 1 or 2 credit cards is good. Having 4 or 5 credit cards is bad.
Okay,
And then finance companies, there are times that it might be a good idea to do a finance company, but all in all, we don't want to do a lot. One way I would tell you to do a finance company, let's say you wanted to buy a big screen TV, CP, and you walked into Best Buy, they use a finance company. But if they were doing one of these 0% deals and you could get that and not pay any interest at all, that might be a good idea.
Yeah,
but stay away from doing a lot of finance company deals as you're developing your credit.
I will. I'm a newbie.
So remember, the credit scoring models want to see a variety of credit accounts on your credit report and not having too much of any one, and that's what we call having a very good credit mix on your credit report.
Credit balance.
Absolutely. Where do you find types of credit in use on your credit report? You want to look on the different trade lines or accounts that you have on your credit report and look for the line that says type of credit in use. It'll say type or account type, the line, and it'll typically say mortgage, installment, revolving, and it'll tell you the type of loan that particular one is. And remember, we want to have a good mix on there.
Okay.
So that's pretty much it for episode 7, CP, and we've ended our credit scoring module, and we'll be moving on to new subjects next time. So let's go ahead and wrap it up. Send them to our website.
Okay, just go to www.creditpuppet.com. See you later.
Bye, everybody.
Bye. I thought finger cut was a good one. I just...
Finger.
Okay.
They should have called it finger.